Good day to one and all. This is Dr. Sivaraman of IKnowIndices.com. Hope you are able to hear me. Hope I am audible. Let me display the PowerPoint presentation. Tracking the forex market together. So we will be tracking it for the second time during the day. It is part 2 between 14 and 14:45 GMT on the 15th of July. So we will review the live market code page. I'll give the link for the same. You can also open it in a browser. I'll focus the camera over that of the live market code page. Now you should be able to see the live market code page. So Euro is trading around 1.4118, 1.4120, and 1.4094 is the low, 1.4198 is the high, and 21 pips negative net change is seen. And those who attended part 1 during that of the European session around 9 GMT, we know that Euro is trading around below that of the initial low, 1.4140, and subsequently it went up to 1.4175. Then later on it started making the slide, and then towards close of the European session it started making that breach below that of 1.4140 and came all the way to that of 1.41 area, and then started making the gain. With regard to GBP, it is trading around 1.6116, 1.6120, and 1.6078 is the low, and they went up to that of 1.6135, that was the initial low, and from there it came down to 6078 and again firmed up. There are small swings happening in the market because of the stress test, and not much of traders' participation is seen. That is why you come across the moves are less volatile when compared to that of the rest normal days. The high was 1.6174, that was not shown after that of the Japanese session. Currently it is trading with 19 pips negative net change. And yen, which is also trading within the range 78.90 to 79.25, 5 pips negative net change is seen. And during that of the European session, it was nominally trading around that of 79.10, 79.15, etc. But very less moves are seen. With regard to CHF, it was actively trading. 0.8122 is the low, and it went up to 0.8161 as the initial high, and I took a buy position around 81.63 and went up to 81.90 and then came down to 81.72. I'll show what happened to the trades and the outcome of that particular trade, what I had done it during that of the European session. In Canadian dollar, it was having an initial low 0.9590 and then breached and formed 95.65 and currently trading around 95.73, 97, 95.75. So it is showing 32 pips negative net change. And Australian dollar is showing about 59 pips negative net change. So when both the currencies are showing negative net change, obviously you understand that they are handling the crosses rather than that of the majors. So because of this stress test, not much of activity is seen in the market, excepting Swiss franc. All other currencies are showing negative net change at the current moment. Then let me go back to that of the PowerPoint presentation. So I given the link for the live market code page, and you can open it and continue to review that. And in the meantime, I'll explain to you the other aspect pertaining to my trading system. So we have just reviewed what happened to the highs and the lows, and also now we will review what happened to the trades, what I suggested during that of the European session. So during the European session, I took a sell position around 1.4149 because the psychological level was 1.4150 above it. Now, so I took a sell position around 41.49 with a stop of 30 pips. 41.79 was the stop, and market went up to 1.4175 and came down, and the stop was not filled, and I closed it during the drop around 13 GMT because you know that gap time they will make the false move. So around 41.13 with 36 pips profit. In GBP, I kept a sell order at 61.34. They went up to 61.35 and came down. And afterwards I booked the profit around 60.82. The stop was around 61.64, 30 pips above, and there was not fill. And 60.82 I booked 46 pips profit. And CHF I kept a limit order 81.63, and 81.61 was the initial high. They came down exactly to 81.61 in the live market quote page, then subsequently went up, and around 81.88 I just closed the position and went up to 81.90 and started making the slide. Then yen I had not taken the position because the subdued spread was seen between the low and the high. Australian dollar also I am not taking the position because it was just staying closer to that of the low, and that was not giving any trading opportunity at the moment. Because if it is about close to that of the low, then probably we can take a buy position. But it was just about 10 to 20 pips above from that of the low, so no trading opportunity was seen. But in the case of Canadian dollar, the spread was very limited between the low and the high. Still, just I have taken the buy position 95.90 with a stop of 30 pips, 95.60, and subsequently around 13 GMT they came down and then came only up to that of 95.91. So I closed it with stop at entry. Then in the case of Euro GBP, the other yen crosses, I was not able to take position because the spread was less during that. And also Euro CHF, they already gained the level, so I do not want to enter a buy position after the gain. Then, so Euro CHF, I took a sell position 87.84 with a stop of 50 pips, and 88.34 was the stop, and it was closed around 87.56 with 28 pips profit, because the market was very subdued in the case of Euro GBP cross. And subsequently, during the session, they could make a slide. Then again, I can re-enter into that market. So here, these are all the positions I recommended and also taken it before you, and just closed it within the session. So if you try to close it within the session with a stop at entry and then try to close it with a nominal profit around 13 GMT, then you will be able to see that the trading is a real pleasure. But if you try to simply hold it indefinitely, then market can come down and go up and things like that. And in that process, we may miss opportunities. But when it goes up again, probably there is no need to chase it, buying it quickly. Instead, let them go and stay at a higher level and see that that particular high they are not breaching for some time. Then you can take a sell position again. So for the if you refer to that of the initial lows and the highs, let me display that particular slide, what I have shown it during that of the European session. So initial high was 41.40. Currently 30 minutes past the start of the US session. So it is 14:10 now, nearly 40 minutes over. And if you see that they are showing now Euro is around 1.4111, 1.4113, and they just like that showed it 1.4135. You would have noticed it in the bid. So that is how they just check whether stops are there or the limit orders are there before making any decisive move in the market. And similarly, GBP was having an initial low 1.6135. That is why 1.6134 I took a sell position. And in the case of Euro, I took a sell position because it was staying below that of 1.4140, and during the talk it made a firming up move. So I thought that it will come up to that of the psychological level 61.50. So I kept a sell order at 61.41.49, but it went up to the next psychological level 1.4175 and then made the drop. So if you carefully watch it when they are just making the rise, you can simply wait and see when they stop going beyond certain level and then take a sell position also. But since I have to finish the webinar within 45 minutes, I just took a sell position and showed that how exactly you will be able to get the profit when you watch the market, spending more time and quickly enter and exit, understanding the intentions of the player. So in the case of CHF, I took a sell buy position around 81.63, 2 pips above that of the initial high, because they just breached the initial high and stayed above there for more than 30 minutes, and afterwards they just quickly gained it again. So they did not come to that of the low. Similarly, in the case of yen, the spread is very, very low, so I have not taken it. Australian dollar, it was staying around that of 1.0730, so there is no point in taking that position there. Currently also you find 1.0642 because they just dropped from that of the low and formed a new low 1.0640, and then currently you come across 1.0630 as the low and staying below that of the recent low 1.064045 area. Then in the case of Canadian dollar, it was staying around that of 95.98, so I just kept a buy order and they filled it and came down 10 to 15 pips and came up, but not much of a move because when the spread is very, very low, obviously this is what's going to happen. So I took a buy position in the case of Canadian dollar just to show that we'll be simply holding a position without any benefit. So that is why I recommend that when the spread is high between the low and the high, then you can think of taking a position in a currency. When the spread is very, very low or very narrow between the low and the high, then avoid taking position in such currencies, even in the case of crosses also. So let me go back to that of the other PowerPoint presentation. So now these are all the positions I have taken and I have booked the profit, but I don't recommend you to take positions simultaneously in all currencies. You review these currencies. Your equity will be a limiting factor for your trading decisions. Always try to take only positions for less than 1% or 1 to 2% of your usable margin to take positions, and always keep in mind market main swings. They may give a better opportunity for you to spread the risk. So suppose I had taken a sell position around 41.49. If I have the capacity to take one standard lot, then I can simply split it into 2 or 3 parts. So 0.3 position, I can take it around 41.49, and without a stop also I can just try it out. In case if they go up 41.75, then I can take a sell there, another 0.3, and another 0.3 I can, or 0.4 I can keep it as a reserve. And this is called spread the risk. So if you have got a capacity to take one lot, split it into as many small lots as possible and try to spread the risk so that when they start dropping it one by one, you can close it. When they again rise it, you can re-enter again sell. This way, if you try to do it, those who are trying to trade without a stop will be really benefited. But most of the traders, what they do is at one stretch itself, straight away they take about 5 lot position. When the market goes against, they tumble and they become very, very panic and try to close the position when it is making really big loss. So try to avoid such trades. Then nobody will be able to shake you if you spread the risk and calmly trade and take only one position at a given time and try to earn out of that. Afterwards, re-enter into the market, and market continues to give trading opportunities. It's not that one day afterwards it's not going to give trading opportunity. Now with regard to the session timings, this is the timing followed by that of the players. So we are in the US session, 13:30 GMT, the European session has started, US session has started. Now we are on around 14:15 GMT in the early European session. Still, Euro has not come above that of the initial low, 1.4140, and GBP also has not come above that of 1.6135. So they are going to make the slide during that of the US session. And gap times indicate also the false moves, and you would have noticed that during that of the gap time between 13 and 13:30 GMT, before the start of the US session, they made a firming up more quickly after making a drop for 13 GMT, closing of the European session, and that particular gain indicated that they wanted to drop at least for 30 minutes during the start of the session. During such firming up move, if you take a sell within 30 minutes of your US session, you will be able to book a nominal swing trade profit. That is referred as a gap time trade. Okay, so then let me explain the trading system. We track the market using the GMT time so that we'll be able to understand that throughout the day how exactly they are the moves rather than referring to our local time. Then also give importance to that of the gap time, session start time, late session, and also the mid session. Mid session they handle the crosses, and the early and the late sessions they handle the majors. So this is the link I use for tracking the live market quote page, and also I have given the link in the hotcom window. Then always refer the market whenever you just refer to it, to that of the high and the low set for the day or for that particular session, and also observe the net change. For example, the high in the case of euro is not being breached, high in the case of GBP is not being breached, market is trading below that of the initial low in the case of euro and GBP, and also Australian dollar. So we know that when they hold the market throughout the day like that, there will be more selling pressure, because yesterday they have been holding high and they have been rising euro GBP in order to give that impression that it could go further up. But actually they just gained the levels and build a sell position. Now they are holding it for any trigger to come, and the stress test could be used as a trigger, and they could make the drop irrespective of the outcome, so that those who are holding the long positions will come for the long liquidations. So normally what they do is they gain the levels and induce the traders to do the short covering when they are all selling with a bearish feel, and change the mindset of the traders to become bullish and turn long, and giving that impression that it could go up further. But without gaining much, they hold at a higher level and start making the drop. The initial drop, traders tend to do the averaging for the buy position. Later on they become bearish and just cut the positions. This is how you find invariably that traders lose money in the market. So don't be along with that of the herd of the traders, and try to see that the players are also traders, and they gain the levels quickly and book profit and drop the market, buy back. So when they gain the levels quickly and book profit, that means they are sellers at the higher level and they are buyers at the lower level. Whereas we try to do it opposite with a bullish and a bearish feel. So try to avoid it, then you will be able to really handle the market very well. Then mid sessions they handle the crosses, so during that time try to avoid taking positions in the majors. During the start of the session, end of the session you can take positions, but mid session they will be handling crosses. At that time if you try to take the position in the majors, you might be holding it for a longer time. So then with regard to the entry decision, when the market is closer to that of the high, you can take a sell position. When the market is near the low, you can take a buy position. In case they are not breached the low or the high in the first 30 minutes of your observation. Now you find that they are holding below that of the initial low, but at the same time they are not breached the low. So if they come closer to low, we can take a buy in order to book profit. During a small firming up move, they could make by 16 GMT during the stress test announcement, result announcement. So normally they make a false move before that of the data release time. If they drop before that of the data, that means they wanted to rise after the data release, irrespective of the nature of the data. And similarly, if they gain the levels very quickly before the data, understand they are most likely to drop after the data. There might be a volatile move here and there in order to confuse traders, but you have to read their intentions, and then you will find it very easy to trade. And once you have taken a buy position near the low, your first exit target should be near the high. And if you've taken a sell position, your first exit target should be near that of the low. That is how you have to mentally prepare yourself. And when the level comes, you can review it using a trailing stop in a profit-making position. Once the position makes about 20-25 pips profit, keep stop at entry so that you are eliminating the risk. Because trading is always combined with that of the risk. That is why in every trading platform they ask you to sign a risk disclosure stating that you understand the risk. So be serious with regard to the risk, understanding the element of risk, because that can really shake you up. So to avoid it, once the position makes profit, immediately keep stop at entry. Even if they hit it, no problem. You don't lose any money. And similarly, if they make profit, then trail the stop, maintaining 15 pips from that of the market. and keep the limit. If they hit your stop, fine, you get the minimal profit. If they hit your limit, you get the maximum profit. And you can move the limit away from that of the market in order to maximize that if the trailing stop is not filled. But don't move that trailing stop away from that of the market. That may lead to that of incurring loss. So the exit you may estimate statistically, or that statistically you may estimate the market may not respect those levels. So try to keep at least 5-10 pips above or below on that of the estimated, because whatever we theoretically estimated, there is no guarantee that the market need to respect it. And also many of the people statistically estimate the support and the resistance and try to keep above that or below that the stops. And invariably you find the stops are being filled. And the main reason is the players also use such similar statistical methods and find where the cluster of stops will be. Besides statistically confirm it, they also visibly get it from other sources and try to hit the stops. So you have to understand that amidst the cunning people, we have to earn money. That's what I can tell you. Then avoid impulsive decisions. So when the market is rising, don't jump into it thinking that it will rise perfectly, or when the market is dropping, don't jump into it. And that may lead to a distress trade. And unless and otherwise you do quickly, the risk aversion or the risk limiting factors like keeping stop at entry and try to watch the market and grab the profit. If you don't have that quick-wittedness, then it will be extremely difficult for you to exit out of such trades. So as small trader, don't expose your equity to a great level and try to take very limited position and try to see that you grab the profit. My best suggestion will be, just in case we have got a sell or a buy position, keep a limit and don't add any more positions and simply wait for the market to fill the limit. Probably it may take 1 day or 2 days, doesn't matter. Then the next day if you try to do it, another trade, and that will be able to give you consistent profit. And market means swings. So always keep in mind your entry will be above that, near that of the high, a sell entry, or near that of the low, a buy entry. Then the element of you being stopped out will be very, very less. So in case if they breach the high or the low, then it could be due to that of the extended move or the intentional move or extended stop end. So if it is an extended move, in case they breach the high and stay above there for more than 30 minutes and rise, then they can rise for 2 hours. So don't immediately jump into the market and take sell position. Wait for the market to cool down, wait for 2 hours, then afterwards you can take a sell position, and after the extended move, they may not do the intentional move on the same day. They may most likely do the intentional move the very next day or then the very next week. In such a situation, you can only take a sell position and wait for the next day. During that intentional move of drop, you can book profit. Otherwise, if you do not want to enter at that time, then next day they will make an upward stop, and before making a drop to hit all the stops of the short sellers who are taken at the highest level. At that time, if you try to take a sell position for the week beginning, then you will be able to really maximize the profit. So understand what are their weaknesses and try to exploit it rather than trying to hit the players on their strength. That's what my humble suggestion could be, because we cannot trade against them. Then if the market cuts the high or the low, and if it stayed below that of the low, now in the case of Euro, they are staying below that of the low, Euro and GBP, they are slowly dipping it. And they are trying to build sell positions here. It might be, you might be wondering, they are keeping it at a lower level, but when they keep below that of the initial low, and during that of the late European session and that of the US session, they are building sell positions here, and people might think that those who are holding the higher level long position, they might liquidate, and some people might think that okay, the low has not been breached, so it's a strong support is seen around 4100, so why not we take a sell buy position. That is how the analysis might be, but later on see how the intentional move comes into that of the market, because the players are here not to rise or drop euro. That is not their objective at all. They wanted to bring in volatility, create uncertainty, and make the traders to become distressed traders, and they induce them to buy it at the higher level, sell it at the lower level, and that is what day in and day out they do it and successfully earn money. So whenever you do a technical trade, sell below that low or buy above that of the high, you try to exit in the same session. Don't carry it to that of the next session. They may gap time, they may make a false move and then reverse, and you might incur a problem. So what is the forecast for this particular session? Euro and GBP are expected to make swing and drop during this particular session for the weekend. So what trade we can think of? Now euro is stagnant, 1.4104. So any firming up, probably we will try to sell. And similarly GBP, any firming up, we will try to sell. So what could be our sell level? 1.6138, 1.6140 is the initial low. Just 2 pips below that we keep a sell limit and with a stop of 30 pips. And similarly in the case of GBP, the same level 1.6134 with a stop of 30 pips. So we define our trade. So we will not just like that enter into the market. Either we will take a buy position around that of the low or a sell position near that of the high, just about 5 to 10 pips, not big difference. And in case if they have breached the initial low and stay below there for more than a session, then we will try to take a sell only near that of the initial low. And we will not just like that enter in the market later on when they firm up, ask many people what is going to happen in the market and things like that. And also we define our risk and we keep a stop of 30 pips so that we take only chance for 30 pips. As soon as the position makes profit, we keep stop at entry. And in the case of CHF, I told you that 0.8161 was the initial low, and they are now come again to that of 0.816770. So we will keep a buy limit order. Just 2 pips above that of the initial low, 81.63, with a stop of 30 pips. Then yen, still they are not breached the higher the low, so we will not try to enter in. Then Australian dollar, still it is closer to that of the low, just 10 pips away from that of the low, and 78 pips negative net change is seen now. So once they breach 75 pips and stay below there for more than 30 minutes to 2 hours, then the chances of recovery becomes very limited in the market. So if they just make a net change of 75 pips, there is a scope for reversal. But if they make beyond 75 pips, that means they do not want to reverse it on the same day. That means the traders are holding long positions. So they want them to liquidate the long positions, probably once the trigger comes in. So Australian dollar, we are not taking any position. We can take a sell. That might be a high risk trade, so I do not want to recommend it. And in the case of Canadian dollar, the initial low was 0.9590. Still after breaching the low, they are staying below that because they are handling the crosses now ahead of the stretch test, and the volume has come down. So obviously the players are focusing on handling the crosses. Once the data is out or the result is out, they could handle the majors at that time. Then in the case of yen crosses, you find very subdued move. They are all very close to that of the low. As yen spread is not being widened, there is no point in taking position in yen crosses. It will be equal to that of taking positions in the case of euro and GBP, because yen is stagnant with only 10 pips swing up and down. So whatever the moves you come across in GBP and the euro, the same will be reflected in the crosses. So it is better to avoid. Then in the case of Euro GBP, it's supposed to be a very active uh, European cross, and you find that the high is 0.8793, the low is 0.8746. They are just about 10 pips above. Whatever the profit booked level, they are holding it at the same level, so there's no point in taking. And only if they come closer to high or just past the middle level, then we'll try to take a sell there. In between the low and the high, they just make a retracement before making a drop, just to give a pretension that they are going to rise, then drop it. So that we have to watch into it, but that requires more skill set to understand that. Then with regard to Euro CHF, the low is 1.1507. I'll answer to the question later. Don't please make it as a private question. Then normally only the FX rate people just give the private questions. When I am doing the webinar, please. You can type your questions, definitely I'll answer it. Then Euro CHF, currently it is trading around 1.1531 and the low is 1.1507, and currently you come across 7 pips negative net change. And during that of the European session, it was staying closer to that of the high 1.1587 and 96 became the high. Afterwards they started making that drop. And during that time, I was explaining that Euro was showing positive net change and CHF was also showing positive net change. Now you come across Euro is showing negative net change and CHF is showing a nominal positive net change. Because of that, Euro CHF has come down. And they formed a new low, 1.1507. Earlier, the low was 1.1521. So they are close off. They have made a brief downward stop and they are closer to the low. And probably we can take a buy position. Buy limit, we'll keep it 1.1522 because 1.1519 was the low. 1.1522 we'll keep it as limit and stop. So we'll keep a stop of 50 pips. Because in the case of crosses, we need to keep 50 pip stop. Because of less volume condition, the volatility will be more, and if you keep 30 pip stop, they could easily hit it. So these are all the positions or limit orders I thought of, and because market is really waiting for the stress test, so we don't come across even 1 pip up and down move. So everybody is waiting, I suppose, including the players. So we might also have to wait for the volatility to start to enter into the market. So probably when they handle crosses, we might get the Euro CHF buy limit being filled. So let me just minimize the PowerPoint presentation and take up the questions which are asked here. And focus the camera over that of the live market code page for us to track during our discussion. Naive trader, your system is excellent. Can we follow the trade end of the day basis or swing trade if you like? I suggest that you use the forecast for doing initially swing trade, and when the going is good, you try to maximize the profit to close it at the end of the day. Otherwise, try to close the position by end of the session, because next session will give another trading opportunity. The naive trader, you sold Euro at 1.4149 because it came close to the initial low 1.4140. Yes, right. And it went above that. So when they was rising it, so I thought that next psychological level, the in-between level 1.4150, they could touch. So that's why on 1 pip below, I kept 1.4149, but they went up to 1.4175. Anyhow, the stop was not filled. So actually, if I watch carefully, then there is a great chance for me to, I would have just entered a higher level like 1.4175. When they stop cutting it for 10 minutes, I would have taken a sell position. In AL, where do you close trades? So where is your target? So that's what, when I take a sell position near the high, I always try to close it near the low. Whatever the low, if the spread is very limited, then I try to close it with 10, 20 pips profit. If the spread is 100 pips to 200 pips, I try to maximize the profit. And when they don't go below that of the psychological level, like 1.41, for about 10 to 30 minutes after coming closer to low, I immediately close the position. And there comes your market reading ability, because they may come closer to low, but they may not breach the low. Sometimes it happens. That is referred as a false move. Hope you're able to understand what the entry point and the exit point. Suppose if I enter around 41.98, around that high, around 41.90 or 41.92 and things like that, and I'll see what was the initial low, 41.40. When they come closer to that and not breaching it, then I'll close it. In case if they breach it, after coming closer to 1.4140 and quickly drop it, then I'll keep my stop 1.4150 and just maximize the profit and just watch whether they drop it further down. And after coming to 1.4093, if they are not dropping for 10 to 30 minutes, I just close it around 1.4095 or 1.41 level by quickly trailing the stop. And especially during the market opening, during the Japanese session, on Monday, they just dropped euro to 1.40 level, and the next day, then a Tuesday, they quickly dropped the euro. If you use a trailing stop, it would have maximized the profit and then recovered all the losses. So the best thing is use the trailing stop and don't simply assume that it can go to the next support level. Probably it might go, but you may not be able to close it. And when the level comes, your mind will say that why not you maximize the profit. So always keep that in mind, that our mind, when euro is around 1.41, will give that impression that when it comes to 1.4060, I am just going to be out. I'll book profit. But when it comes to 1.4060, it will give the temptation that it might drop further down. Then you wait for it. Quickly they reverse it. That is how many of the traders miss that opportunity of booking profit. It is as important as deciding on the entry. How decisively you are taking the entry. The same way, when you plan your exit, try to exit at that particular level or use a trailing stop to maximize the profit. Don't blindly watch the market and miss that opportunity. And especially when you look into that of the chart you will come across 3 red candles. Immediately you will think that market is going to fall in a very big way, but they can simply reverse it because they know how to trap the traders. This advice could be fine after you are in a position. Okay. How to identify the type of moves? I have given my trading system webinar, and there the explanations are given. So much interference questions from our Cox. I think it's the same genus. Then Ken, would you re-show your slide before the trade entry? Yeah, I'll show it. Okay, no more questions here. So let me go back to the PowerPoint presentation. So these are all the limit orders. I have fixed it. Sorry, it is 1.41 typo. 1.4138 is the limit. I have fixed it because 1.4140 was the initial low, and similarly GBP 1.6135 was the initial low. 1.6134 I kept it as a limit order. If they fill it, fine. Otherwise, I just remove the order for the day, and the next day I relook into the market. So I don't chase the market. And in the case of Euro CHF, 1.1522 has been fixed as the limit. and they are not still reached it. Currently trading around 1.154144. Okay. So once the positions are filled, probably I'll just give an explanation pertaining to that in the blog or when you ask me. So I take this opportunity to thank FX Street and also you people who have come here to listen to my talk. And these are all nothing but the guidances. There is no hard and fast situation that you have to necessarily follow it and things like that. If you like it, you can follow it. Otherwise, you can simply ignore these concepts. And because every analyst have got their own ideas and the concepts, and they're all worked out because of the hard work and past experience and also analysis pertaining to the market. So each one will have their own views pertaining to the market. So I respect your views. Similarly, you can also respect my views. Thank you one and all. See you on Monday during Asian Session Live Market Analysis. Thank you one and all.